is the current liability, right? 5.8. Please pick that also. What is the non-current liability? This is the non-current liability. So now, see, addition of this current, this is 5.8 as current liability. So where is non-current liability? Now, where is non-current liability? Non-current liability is what? This is the non-current liability. We have 3.0. Are we still together? This is 3.0. Don't forget, this is 3.0, right? This is current liability, right? This is non-current assets. This is current assets, right? This is current liability, right? Now we go to non-current liability. Now this is the non-current liability that we have, 3.0, right? So we move. So I will ask question now. So let's quickly go back. I hope you pick that. Let's quickly go back. So now this is what we have. So the total assets, we have 8.8 million, right? Are we together? The first asset is 8.8, right? Plus the current asset. What is the current asset, class?
6.3.
6.3, good. 6.3, right? 6.3 minus, right? Minus current liability. What do we have?
5.8.
5.8. 5.8, right? Plus the non-current liability is what, class?
3.6.
3.0.
3.0.
Okay, 3.0. Thank you for that. Thank you. Right? Please don't forget, please, for the purpose of exam, right? Please put your naira sign, put your million, right? Put your naira sign and put your million, right? Right? Please don't forget this. It's very important. Please, it's very what? Important. Right? Now, we move to, now we divide divided by the numbers of shares, right? Now the question is, how do you determine the numbers of shares, right? Now don't forget that when you want to determine the numbers of shares, right, numbers of what? Numbers of shares, right, is equals to the ordinary share capital, right?
Nominal price.
Thank you. God bless you. Share capital, right? Capital, right? Divided by the what? The nominal price, right? Nominal price, NP. Please don't write NP in exam. I beg. I take God beg you. Don't put NP. So now the ordinary shares. Let's check. Let's go back to our capital structure, our financials quickly. Okay. Let's go back to, let's check our ordinary shares where we have ordinary shares. Okay, this is our ordinary shares, right? This is our ordinary share capital. Have you picked it? 2.1, right? This is the nominal what? This is the nominal price, which is what? 1 naira. Are we together? Oh, we are together. Okay. Now, 2.1 divided by 1 naira will give you the numbers of shares, right? Divided by 1 naira will give you what? Numbers of what? Numbers of shares. 1 naira will give you the numbers of shares. Class, what do we have? Class? Okay, we have 2.1 naira, right? 2.1 million shares, right?
Yes, 2.1 million shares.
Okay, thank you. 2.1 million shares, right? So this is what we will be using to divide our methods, right? Now, 2.1 million, right? Shares. Now, class, just give me the figure. What is the market price? Market price now is what, class?
12.1.
What is the market? You say? What is the market price? Quickly. Market
3 million.
3 million, okay. Okay, 6.3, just do it this way. 8.3 plus 6.3 plus that, what do you have?
Plus, that's 12.3 now.
Okay, 12.3.
Uh-huh.
Okay,
3 million, sir.
No, now why are we having this is 8.8 plus 6.3 minus 5.8 plus 3.0.
5.8 plus 3.0,
Uh-huh, that's
right?
12.3.
12.3 million, right?
Yes.
12.3 million divided by 2.1 million. 12.3, just say 12.3 divided by 2.1 million. Just do it like that.
So we have
We'll give you the,
5.8, 5.8,
okay,
571.
5.857,
85. Okay.
7, right?
Yes.
Let's say 6. So this is 5 naira 86 kobo, right? Per shares. Plus, this is 5 naira 86 kobo per share. This is market price. Now, when you want to determine the market value, the total market value, what do? You just multiply this by the numbers of shares, right? Plus, right?
Yes.
Total market value. Market value. They didn't tell us to determine the total market value actually. But if when you want to determine the total market value, this is what you
But
use. This
sir,
is
the
per
answer
share.
should be three naira per share.
Okay. Check. Please check. Someone should as well confirm.
5.8 and 3.0 should be together.
This is 5.8. This is this. This is division. 8.8 plus 6.3 class.
That's 15.1.
That is what?
15.1.
Yes, that's 50.1.
15.1.
Then minus 5.8.
Add 5.8 plus 3.0 together. What do you have?
8.8.
That's 8.8.
8.8. Then minus
Yeah.
it. What do you have?
6.3.
Divided by 2.1.
6.3.
That's 3
Okay.
naira.
Divided by
That's 3
2.1
naira.
is 3 naira.
Yeah.
Is
Yes,
it 3
sir.
naira?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Okay. 3 naira per shares, right?
Yes, sir.
Three, 3 naira per shares. Okay.
Yes,
Now
sir.
don't forget that this is per share. If you want to get the value, right? If you want to get the total market value, what do? You multiply your market price, right? Times the
Times
what?
the number
Numbers
of
of
shares.
what? Numbers of
Shares.
shares. You can see that it's very simple, right? It's very simple. It's as easy as that, right? Now, the next question is on what? The next question is on what? Is on net asset based revalue, right? Which means that we need to pick the revalued amount, right? The net asset base, right? Which is the revalued amount, right? Quickly, net asset based plus net asset base. So now, what is our formula? Our formula still remain the same, right? Our formula still remain the same, right? Everything here is still remain the same from this part. We still copy it this way, class. We still copy it this way, but our total asset will be different and total liability. Why? Because we have some revalued figure given to us in that what? In that question. Now let's quickly go back to the question, class. Now, don't forget that this is the financial statement. This is the financial statement, financial position, right? And we're given some additional information. Now, what is the additional information, class? We're told that KL management had some of the company assets independently what? Revalued in January what? 20 what? In January 2020, in January what? In January 2023. Those values are shown below. What it means is that you have to replace some of these assets. You have to replace freehold land. They revalue them. Freehold land and building, right? The figure freehold land and building here is 3.5 before. Now, when they revalue it, it becomes what? 8.3. We need to change it to 8.3. Pick it. Freehold premises will now be 8.3 because we are using the what? Revalued what? Method. Now, machinery. Do we have machinery from from our capital structure, from our financial, do we have, this is machinery. Machinery before was what? 5.3, right? Now, what did they revalue it to? They revalue it down to 4 point what? 4.3. This is the what? This is the revalued amount that you are going to pick now. Now, let's go to inventory, right? Inventories. Inventories. You can see that inventories here is what? 3.0, right? Now, what is the revalued inventory? 3.1. They revalue it upward. So, which means that the only thing you will change under the current liability class, the only thing you will change under the current liability is inventory, because that is the only asset. That is the only current asset they revalued. Don't forget that we will change the freehold premises to 3.8, right? We will change the machinery. We will change freehold to 8.3. We will change machinery to what? 4.1. Are we
One.
together? We will change only inventory to 3.1. So in the case of 3.0 here, you put what? 3.1. Are we still together, class?
Yes, sir.
Okay, good, good, good. Now, we now move now. Now, don't forget that the only thing we will change here is, instead of 3.0, we put 3.1. Now, let's go back to our solution. Now, let's go back to our solution. Please don't be confused, right? Now, let's go back to our solution. This is it, right? Now, what do we have? We have, firstly, the current assets, right? The total current assets, okay? Okay, just give me the non-current assets, the new non-current asset, please. The
8.3.
revalued amount. You say
Yes, sir.
8
8.3.
8.3, okay.
It's 1.
The second one, okay, 8.3 plus, what is the second
6.4.
figure? 6 point what?
6.4. 6.4.
6,
Yeah.
okay, 6.4. That was revalued, right?
Yes.
6.4, right? Now, 6.4. This is for current asset, right? This is for current assets. The non-current asset, sorry. The
Okay.
non-current asset that was what? That was revalued, right? Plus the current asset. You know, the current asset is supposed to be 6.3, but what
Because
happened
of
is that,
inventory.
yes, right? Because of what? Inventory will change, right? Now, what you need to do, let's go back to the current assets. Don't forget, the inventory is 3.1. Now, class, in your calculation now, replace 3.0 with 3.1. What do you have? What is your current asset? Class, are we still there?
6.4.
6 point what? 6.4, right?
Yes.
Right?
Yes.
Okay,
Yes, sir.
6.4, right? Thank you. Please don't forget how we determine the 6.4. Please jot it, write it down. Please write it down. 6 point what? 6.4. Right? This 6.4 is the current asset. Right? Now this is so minus the current liability. Nothing changed in our current liability, right? Our current liability still remain the same, right? So which
Yes.
means we need to just copy all this. We need to copy all this part and put it here, right? So don't forget that they revalued some non-current assets, which is this, right? The current asset, one of the current assets, which is inventory, was revalued. That is what gave us 6.4 instead of 6.3 earlier, right? Now, another one is the current liability, the total liability, right? This is the total liability, nothing was revalued upward or downward. You divide by the numbers of what? By the numbers of shares, right? Class, what is MP? Class, don't go and write MP in exam. Oh, MP means MP3, MP4, right? So, class, Class, quickly. The second non-current asset is 4.4 from the additional information. Whoa. Oh, whoa. Okay, let's go back. Oh, thank you for that. Freehold is 8.3, class. The machinery is 4.1. Are we together? Are we together? You can
Yes,
see
sir. I think it's
freehold
people
is
that call it money.
8.3 and 4.1. Who gave me that figure? So machinery is 4.1. Machinery is 4.1. Okay, 4.1. Thank you. I think I was the one that was. Sorry. So what do we have? Please, class, quickly, class, quickly. Hope we are getting it. Are we getting it? Is it simple? Is easy, right? Right. So that is SFM for you. SFM is one of the. What do we have? So SFM is one
4.76.
of the easiest cost, right? What do we have, class?
4.76.
Class, what do we have? Quickly now, quickly, class.
4.8.
4 point, 4 point,
8.
4.8 naira, 4 naira, 8 kobo per shares, right? 4 naira per share. So this is the what? This is the market what? This is the market price, right? Using this method, using this revalued base method, right? 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 This is the what? This is the market price. Class, can we continue? Do we understand? Hello, class. Do we understand? Can we proceed to other methods? Let me see your hands up, please. Indicate with emoji. Okay, we can continue. That's fine. That's fine. Okay, thank you, Ahmed. Thank you. So, class. So, which other method do we have here? The price earning ratio, right? The price earning ratio is is another method we need to look at, right? Don't forget our formula, right?
Market
I
price
believe. Thank you.
by
Sharp,
any
sharp.
special.
Thank you, sharp. I love that. Market price, market price equals to what?
Market price
Market
equals
price,
to market.
Price divided by any star shares.
market price equals to what? Market price
Price
divided by any
earning
per
ratio.
shares. So
Any per
cross
Price
share.
earning
multiply.
ratio times
Yeah.
earnings per share.
Okay, times earning per share. Thank you. Price earning ratio. Please just cross multiply it. Let me go back so that you will see it again. Just cross multiply it. So me, I don't need the formula. You can go and just master the formula actually. You can see the price earning ratio equals to market price divided by earnings per share. Just cross multiply, get your market price equals to price earning ratio times EPS. EPS, right? Now, let's go back to our question. Now, P ratio, right? Please kindly mute your mic. P ratio times EPS. EPS means earnings per shares, class. EPS means what? Earnings per share, right? Now, in this question, earning per share is not given, right? We need to determine earning per share. That is the first thing you need to determine, earnings per share, earnings per share. Class, what is our formula for calculating earning per share? Profit after tax, Abi?
Over number
Minus
of ordinary shares.
preference dividend.
Thank you, sharp, sharp.
The number of
Minus
ordinary
preference
shares.
what? Thank you. God bless you all. Divided by the what? The numbers of shares, right? Numbers of what? Numbers of shares, sharp. Good. You can see how we flow in SFM. SFM is not, there's nothing there. Do you get? So, there is no actually nothing in SFM. You just need to get the right person to put you through. It's just a step, right? It's just a step. Let's quickly continue. Now, profit after tax. Now, let's go back to income statement quickly. Let's go back to income statement from this question. Now, we're given, this is the income statement of KL, right? This is the profit after tax, 4.1, right? What is the profit after tax? This is 4.1, right?
4.4.
4.4.
Ah, thank you. Sorry. 4.4. Dividend declared is 1.1, right? Dividend
Yes.
declared is actually 1.1. So 4.4, right? No preference dividend. There's no preference dividend. We already know. Please take note of profit after tax of 4.4. Okay. Now, now let's quickly get our, what is it called? Now, 4.4 4.4 divided by, we already know our numbers of shares, right? Our numbers of
2.1.
shares,
2.1.
2.1, 2.1 million shares, right? 2.1 million shares, right? So what do we have here? What is our earnings per shares class? Earnings per shares,
2.1.
2.1. Thank you. 2 naira, 1 kobo, all right? Per what? Per shares, right? Please always indicate all these signs. Is very what? Is very important, right? Is very what? Important per shares, right? This is what? This is our earnings per share. You can see that we need earnings per shares. Then we need PE ratio, right? Which is price earning ratio. Now let's quickly go back to our question. Let's quickly go back to our question where they were given industry PE ratio. Now, don't forget that we have something like this here. Please take note. The average price earning ratio for listed business in the printing industry, you can see they give us as what? 9. And the average dividend yield is what? 6%. Class, are we together, please? So the price earning ratio is 9. So which we are good now. The price earning ratio is what? Is 9. Because all this will be given in the question. We cannot have two unknown actually. So market price is equals to what? PE ratio, right? Which is 9 times the earnings per shares, right? Which is this. This is our earnings per share class. So what is the market price? Please don't write MP in exam. Is MPO, is not MPO, is market price class. What do we have?
18.9.
Okay, quickly, 18,
1.9.
18, 18.9 naira, right? 18.9 per shares, right? 18.9, 18 naira, 9 kobo, right? Per shares, right? Per shares. Thank you. God bless you all. Now, what is the next method? You can see that this is very simple now. It's very straightforward. Now, I will tell you the year. I can test this question, right? I will tell you the year. Don't worry. So this dividend yield, right? Let's quickly go using the dividend yield, right? What is the formula?
Dividend
Dividend
price
yield.
per share over market price.
Okay, over market price. Okay, dividend per share over market price. Just make it the subject of the formula and give me the final market
Dividend
price.
per share divided by dividend yield.
Thank you. Okay, dividend yield, right? Dividend yield, right? Market price, market price, right? Market price is equals to what? Dividend per shares, right?
But dividend yield.
Okay, thank you. Dividend per shares divided by the dividend yield, right? Dividend yield, dividend yield class. This is DPS, dividend per shares, right? Dividend per shares. Let me write it in full. Dividend per shares, right? Now, dividend per share is not given in this question. You can agree with me that dividend per share is not actually given in this question, right? Dividend per share is not given. Dividend per share from the name. So what will you use to determine? You look for dividend, right? You will not divide it by the numbers of shares. Are we together? You divide it by the what? by the numbers of shares. Now let's go back to capital income statement. We see dividend declared, right? Which
Yeah.
is 1.1. Are we
1.1.
there?
Yes, sir.
So 1.1. So we'll do 1.1 divided by the numbers of shares, right? We'll do 1.1 divided by what? Divided by the numbers of what? Divided by the numbers of shares. 1.1 million, 0.1 million, right? Divided by the numbers of shares, which is
2.2.
2.1, 2.1 million, right? Million shares, right?
Yes, sir.
Million shares. Class, what is dividend per shares?
52 kobo is 0.52.
Thank you. God bless you all. 0. What?
52.
0.52. Oh, okay, 19%. 0, 0.52, right? Per what? Per shares.
Yes.
Right? Are we together? Don't forget that we're given industry dividend yield because we can't have two unknown, right? You can see dividend yield. See, all you need to do in ICANN or ACCA question, first, read the requirement, understand the topic that, okay, it is this topic. So once you understand that topic, once you understand that this is the topic this question is coming from, you don't need anything. Just go straight to the point and solve question, right? Now, this is the average dividend yield. It's given in the question, which is what? 6%. Because we can't have two on what? We can't have two unknown, right? We can't have two unknown, right? So MP, which is the market price, equals to the dividend per shares, right? Dividend per share is 0. This, right? Divided by dividend yield. What is the dividend yield? How many percent? 6%, right?
Yes, sir.
Class, are we together? 6%, right?
Yes, sir.
So what is the 6%, class? That is 0.06. Let me
0.06.
remove this slash so that we will not get confused. So what do we have? What is the market price?
8.67.
Pardon?
8.67.
8.67. So 8 naira 7 kobo per shares, right? Per shares. Class, you've already earned your how many marks? You've earned your, okay, this is 16 marks actually. Total. Oh, total is 16 marks plus the cash flow, right? Plus the cash flow. You can see the marks that you already earned with just what you just did now, right? No, so class, do we understand?
Yes, sir.
Okay. Now, this is what next gen is trying to bring to the table. That is, we are incorporating what? Theory with what? With practical, right? You can see now, when you see this kind of question in exam, you can be able to, like, you can flow, right? You can flow very well because I've given you the background on how to do it. Please, class, the only way we can say, okay, thank you for all what you do is for you to do what? You refer people to our YouTube. Please, make sure you have subscribed. I believe some of you is yet to subscribe to the YouTube channel. Please go to the YouTube channel. Everything you need to know on cost of capital, on some of the topics so far is there. Just take your time, look at the step by step. Now, I believe that when you look at the step by step approach to determine the weighted average cost of capital, portfolio theory, and also the risk adjusted cost of capital, you could attempt any question because it is loaded, right? It is loaded. So I think that is the end. Do we still have any other thing here? Okay. Now, your assignment, right? Just leave free cash flow for now, right? We'll fix a class to actually solve the question on future cash flow, right? We'll fix a class for that. Please, class, your assignment, I want you to go and look at this method very well, critically, right? Look at it very well. what are the advantages and disadvantages you think it may arise from all this method of valuation? And now, class, when Ahmed want to merge with Bukola, right? What are the benefits? That is the benefit of what? Merger. The benefit of let me give you expo. One of the benefit of merger is what? Is access to raw materials, right? Um, raise of funds, right? You can raise capital, quick raise of funds. You can quickly raise capital, right? And some other benefits of what? Merger. I've given you hints on that, right? If Bukola want to merge with Ahmed, why do you want to merge with Ahmed? Why? You need to look at all those areas when you are answering what? Question, right? You need to look at all those areas. So I believe I've been able to explain uh, a business valuation using a different method.
So
Class.